Without the ones like you, who work tirelessly to keep things running, everything would suddenly stop. Hospitals, factories, schools, and power plants, they all depend on you. No matter the weather, emergency, or time of day, you're the ones who get it done. At Grainger, we're here for you with professional-grade industrial supplies. Count on real-time product availability and fast delivery. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
The views, opinions, or advice offered by this show's host do not necessarily reflect those of News Talk 780 KOH or its parent company, Cumulus Media. This is Bosma On Business with award-winning entrepreneur Mike Bosma, sponsored by Keystone CPAs. We're getting Northern Nevada back to business.
Good morning, Reno. It is Mike Bosma, your business-savvy CPA, coming from the KOH studio. Hey, you Garden Show listeners, you want to hang tight and hang on. Just like each and every Saturday, we give you 60 minutes of action-packed business adventure. Of course, today, no different. Today, we're doing a little solo, no guests in the studio today. And the idea, the genre of today's show is just getting you smarter about two things that should matter to you a lot. One, of course, we talk about all things business, and I'm going to go through, every once in a while, about once every quarter, I do the Biz Buy Sell review. If you can pull your computers up right now, your tablet, your phone, bizbuysell.com, we're going to be able to go through the good, the bad, the ugly about how these current listings in Northern Nevada, what they are, maybe if you can make a buck or not on them. And then, of course, on the other part of that equation, we're approaching a significant tax deadline for extended individuals who pushed until the very last date they can, which is October 16th, file their taxes. And maybe the good, the bad, the ugly about how in the world they're going to navigate those things and some other things going on in audit land. In fact, let's start there for fun, because it is fun. When they said that they were going to hire 87,000 auditors, you kind of you'd think, well, is that really going to affect you or impact you? And what I'm finding out that it absolutely is. The Reno office of the Internal Revenue Service is roughly doubled in size, and their audit activity has picked up significantly. So now they are looking at certain types of businesses or certain types of taxpayers like businesses, especially if you're making anything over $1 million. So there's there's it's called a target-rich opportunity if you're in that land. And so we're now, instead of when our clients come to us and tell us, hey, we want to save as much money as humanly possible, they say, I want to do that, but I don't want to lose on an audit. So everybody's, I would call, for lack of a better term, puckering a little bit in this season of audit activity. So anyway, I think probably the biggest question that people are running up the flagpole, and they have these free one-on-one consultations we do, is, well, this is what I did. Do I have a problem? So, probably the best example is this. I had a client got referred to me. They were out of, where were they? Tennessee. And somebody had told them that they can take a 100% deduction on a non-cash charitable contribution. And because the partnership that they gifted, it just had cash in it. So they said you take a 100% deduction. So they a CPA firm that did that work went out of business, and more on that later. They went out of business, and then their client reached out to me to say, hey, you're familiar with this stuff. How, I went to some other CPA. They said I can't do that. I can only take 50% of my adjusted gross income. And I said, well, I'm always one good piece of advice away from getting fired at any moment. So I told, well, the CPA that you talked to is absolutely correct. You cannot take more than a 50% deduction, and that's for non-appreciated properties. Limited to 30% of adjusted gross income if it's appreciated property. So the best you can get is 50%. So, I understand. He said, well, I'll just keep talking to people. I said, well, let me tell you about the audits on these things right now. He said, well, what do you mean the audits? And then he just changed his whole tone, right? Because everybody's big and bad and look at me until all of a sudden they're looking down the barrel of an information document request or IDR asking like, what have you done? And then you see the world very clearly. So I told this gentleman, and he absolutely agreed. I said, that was for the 2021 tax year. I said, you should immediately file an amended return and pay the tax. And he was like, almost shocked that I would say. I said, for you, the difference between getting 100% deduction versus a 50%, you're going to get it in a year or two. You're still going to get it. So why would you risk taking this kind of stupid position that is not supportable, and then you're in line of sight on a 25% substantial understatement penalty? And if you amend your return immediately, you get audit protection on it. They can't levy the penalty, so that's why you do it. Right? You're like, it's not worth an extra 25% of tax. You're going to lose it anyway. There's no way to defend it. So amend the return. You'll still get the same deduction in a couple of years without the big penalty. So, and he's like, oh, right, it's just the time value of money. I understand it's hard to pay tax, but be smart about it, my people. So that's what's going on in audit land. So anyway, bizbuysell.com. There's a couple of businesses on here I want to talk about. And this segment, we call it the good, the bad, the ugly, about buying a business. So at the top of the list, I will read to you the ad. Popular franchise restaurant in prime location. This is an opportunity to purchase a popular restaurant, franchise restaurant that's blah, 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 blah. So the question is, now when you look at these businesses on bizbuysell.com, there's always two numbers that you want to look for. Number one is what they're selling it for, but the more important number is cash flow. Now, I'm just going to give you a little primer on that so we're all talking the same language. So on cash flow, that means sellers discretionary earnings. So, and that is what the business makes. You add back interest, federal taxes, depreciation, and then whatever the owner took out in the form of W-2 comp or perks and benefits. I think insurance and health insurance and life insurance, all that kind of stuff. And so that's really what the owner benefited. That's roughly referred to in the industry as a cash flow calculation. How much cash flow to the business? So this popular franchise restaurant in prime location sounds tempting, doesn't it? Selling for $375,000. But the thing that's telling people is that there's no cash flow number. Now, that means it's not making money, or that it's making a little bit of money and it can't justify it, so they just don't put the cash flow on there. And I'm telling you, that is probably the biggest mistake people make is, they think, well, what should I expect to make as a return when I buy a business? And so I'll give you an example of a good one. The next one I want to talk about is profitable general contractor netting over $850,000. So, and you think about it, that's $850,000 a year. That's not chump change. That is a good living. So, and it's selling, its asking price is 2.8. So if you just did some quick math and said, okay, I got 2.8 divided by 850, that's a 3.2 multiple, which is a little heavy, but it's not stupid heavy. And one of the things that you just want to be smart about, my people, my friends, is don't get overexcited about multiples, because multiples matter. That's earnings multiple, cash flow divided by the purchase price. But at the end of the day, all that stuff's negotiable. Once you start looking at a business, and that's what I just got a listing on the California side of Lake Tahoe. Neat company, neat family. And I was trying to explain to them they how this process works. And they said, well, we want a 4 multiple. I said, well, I'm not going to take your listing at a 4 multiple. And he goes, well, no, that's fine. I'll hire somebody else. I go, but nobody's gonna take you at a 4 multiple, or if they shouldn't. So then he tried to do it himself, and then a year later he's come back. He goes, okay, well, what kind of multiple do you think you should get? I go 3.2. All the comps say 3.2. I go, but you don't really care. A multiple is a bragging right. That's all it is. Just a bragging right. Some of you, beat your chest. Look what I got a 5 multiple. I got a 4. What you really, really care for is how much you sell the business for, net of tax, net of fees, how much you get at the end, right? So, and that's where I think, and as I explain that to people, and I'm explaining to you, is, if you're going to sell your business, or if you're thinking of selling your house, sell whatever, don't get over wrapped up on what it's listed for. Make it attractive, and then you can always engineer terms that are going to get you the amount of cash that you want. I'll just give you an example. Like, here's this contractor company that I just mentioned. I had a buddy of mine, a former buddy of mine, that we call him Looky Loos. He was interested in, he's never owned a business before. He was interested in buying a business. So I spent countless hours showing him different businesses, and and then he reaches out to one of these bizbuysell.coms to a broker that's there, and And then he gets under contract with his broker to buy this $5 million general contractor company. And I remember, I'm like, well, and he goes, can you help me? I can. But because I didn't make the introduction to the broker, now I don't get a referral fee. Normal referral fee is 20% of the fee. So if you got your pencil and your pad, the way the math works is this. A $5 million transaction is going to have somewhere between a $400,000 and a $500,000 brokerage fee for the business broker to sell the company. And then I would get 20% of it. So let's say it's full tilt, so it's straight up $500,000 fee. That's a $100,000 fee to me. And I earn every penny of that fee. I'll tell you, it's a lot of work. But what I told him was, I go, that would have been my fee, and then you wouldn't have had to pay me. But now that I'm not getting a referral fee from the seller's agent, now I have to charge you for that. He goes, well, what are you going to charge me? I said, the minimum I can do this work for is $50,000. Minimum. Now, I understand it, people. That sounds like a lot of money. But when you're throwing a lot of resources at it and it's like you're all day, every day, and they get staff that have to work on all this stuff, it's a good living, but it's like everybody becomes a real estate agent because they think, I can just go to coffee once or twice a week. It's like, no, you have to hustle every day. So he said, well, I can't afford to pay you $50,000 to do this work. And okay, that's you do you, my brother. You do you. So a while later, we're sitting around my fire pit and having an adult beverage, and he's telling me about this thing. Of course, now all he wants to do is talk about all the business and all that. And I'm like, you can, I'm not your accountant. You should talk to your accountant, and you can pay that person to, ask all these questions. But basically, if you're at the fire pit, you get all that for free from yours truly. So we're chatting. I'm like, that's fine. And he says, yeah, well, I ended up buying the stock of this corporation. And I'm like, you did what? I bought the stock. And I remember just like, I pulled out my iPhone. I opened up the calculator. And I said, well, let's just do some quick math here. So that's $5 million that you don't get to depreciate. Okay, let's see here. That if you were to allocate that all to goodwill, that'd be over 15 years. So you're losing $333,000 a year in tax deduction times a 37% tax rate. So you didn't hire me for $50,000. It's costing you $123,333 a year in extra taxes because you didn't structure it right. So when we come back, we're going through the bizbuysell.com, going to go a little bit deeper dive into this general contractor, the good, the bad, the ugly, and how to structure it so after tax, after cash, it works for you. It's called Bosma On Business. Newstalk 780, KOH.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show. Comedian John Christ.
How long have you been in Nashville? Let's see, 2018 is when I moved here. I lived in an apartment. I didn't know anything about it. I lived in L.A.
You were living in L.A.? How was that?
Yeah. Well, let's see. Good for my career. Send me to rehab, though. So that's pretty much the sum of it.
The Sean Ryan Show on YouTube or wherever you listen.
Talking about the good, the bad, the ugly, buying a business, and on bizbuysell.com, probably the most prominent site to list a business. And just I talked to you before the break about that example of buying it wrong. He was my buddy that bought that company for $5 million and didn't bought the stock instead of the assets, losing $123,000 a year of tax benefit. That's extra taxes because he structured the deal wrong. He was all excited. He's an engineer by trade. He was all excited about his multiple. He was like, I can't believe I'm getting this for a 2.5 multiple. This is like, look at me. I'm like, you gave it all back in taxes, my brother. So, so like I said, don't get caught up in the multiple, but be smart about it. Because at the end of the day, he put $500,000 down, 10%. It's pretty standard. Got an SBA loan, financed $4.5 million. And all you care about is the debt service, debt service the loan. That's what you're trying to do, and then pay that down, and so that you have some available cash flow for yourself, you and yours. Is how that goes. So I'm talking about this profitable commercial general contractor netting over $850,000. So that's a 3.2 multiple. But one of the things that I would encourage you to look at is when you're looking at these numbers. So this has revenue of $11 million. So it's asking. It's cash flowing roughly $890,000 on $11 million, which is under 10%. So that way, that that speaks to, from a general contractor's perspective, that speaks to that is a lot of government work with tight margins, and that doesn't make it a bad deal. It just means, you're doing a lot of volume for not a lot, and that's why it's hard to sell those for a lot of money, because the rigor of what you take on is a lot. Now, for my buddy who bought the stock, the reason I would never recommend buying stock of a company, ever. Did I say ever? I think ever. The reason you never do that is you take on all their liabilities. Now, in a purchase and sale agreement, you're going to have indemnifications, both. So, if there's liabilities I didn't disclose, it's not on me, but you still have to fight them. So why would you don't know what their payroll, do they make their payroll deposits on time? They're going to notify the corporation, and now that's yours. You just inherited all that headache and all that mess. It's just... So, and he said, well, I couldn't, he says this, I couldn't buy the assets because it's the company that had the contractor's license. And I just, almost felt like patting him on the head. I go, so you can do both, my brother. You can do both. So you have your entity that buys all the assets out of the thing, so you get the tax benefit, and you're sheltered from the limited liability or from the liability of that previous company. And then you operate out of that, and you just lease the assets back and forth. Easy skeezy lemon squeezy. So that way you have a shell that has the contractor's license, and but then you get your basis step up, and you just go merrily along your way. Easy. And I'm just like, oh man, just rookie mistake cost him, a lot of millions of dollars. Anyway, sad. Makes my heart sad. But anyway, that's, I guess, we call it the School of Hard Knocks. Got my PhD, the School of Hard Knocks, and hopefully we're helping you, my loyal listeners, avoid one or two. The other thing is, I would give you a heads up that contractor company on bizbuysell.com that I was talking about is listed with a broker. I don't know this particular person, but if you're ever going to want me to help you buy these things, which I highly encourage you to have buyer representation. Every broker will say, no, I can represent the buyer and the seller. And I do not recommend that for anybody ever unless it's a very small deal. And the reason for that is, like that broker who I know very well that represented my friend, right? Because, they're not giving any advice, because the advice that's beneficial for one is detrimental to the other. So they don't give advice. They just don't do it. And and it's really outside of their area of expertise. But because of my area of expertise, I could say, well, what if, go talk to your CPA, go talk to your lawyer. Shouldn't we be talking about this? How can we close the gap on this thing? And then usually people come back, that's a pretty good idea. So, because that's what I try and do, is just always be very much up to speed on having good ideas. Going through bizbuysell.com. The other thing that you'll see a lot of is, these trucking companies, really just a dime a dozen. I'm not overly excited about them, but if you just need something that's going to generate cash flow for your investment, go for it. There is one here that was interesting. I saw this a little bit earlier before the show. Pizzeria, $115,000. Cash flow, $83,000. So, just a little over 1x of cash flow. And that's where people, they talk about multiples. How do I value the business? And so this pizzeria, we call it the paper route, because if it's cash flow at $83,000 to the owner, then you really don't have anybody to run it. So if you ever want to take a vacation, if you want to do something that's not running your pizzeria, because you can't just close all of a sudden because you want to take a day off, that's going to be somewhat problematic. And that's why those things are very, very difficult to sell. If you have one of those, I can help you know what to do with that. So, and then next, this other one was kind of fun. Thriving Woman's Clothing Boutique awaits next owner. So it's kind of like it looks. I don't know. That's one of the things. Always when you list these things, you got to keep them confidential. You don't want your vendors, your customers, your employees knowing that you're trying to sell your business. But you just have to decide: is this a new, is this new clothing or used clothing? Used clothing is all the rage, but you have to get used to when you're in a used clothing situation. Go through a whole. I was talking to Jessica Snyder, owner of Junkie, and she said you go through tons and tons of old clothes that are of no value to find the diamond in the rough. So I just thought, that's an interesting one. But this is the one I think that you should get really excited about. So for a number of reasons. So I'll read this to you. Now, stay with me, my listeners. Funeral home with real estate located in the opportunity zone. Oh goodness! You want to own a funeral home? It doesn't have to be owner operated. Rare opportunity to purchase a funeral home, cremation, and cemetery located in an opportunity zone in Nevada. So I'll talk about that in a minute. This price includes the real estate, blah, blah, blah. So it's cash flowing $253,000, asking price $1.5 million. So that's a pretty hefty multiple, but it includes the real estate. So, and I guess that's where one of the things that's a common question is, if I include the real estate, how does that impact my sales price? And then, of course, if how does the opportunity zone impact it? So we're going to talk about that when we come back. It's Bosma On Business. News Talk 780 KOH.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
Work hard and save your money. That way, when you're old like me, you can buy the things that only young people can enjoy.
Squirrel watching.
You heard it here first. Get yourself a squirrel cam, spend $30 a month on nuts, and you'll be at early retirement before you know it.
No, Piggy, this is the road to a podcast nobody listens to.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.
Hello, it is Ryan, and I was on a flight the other day playing one of my favorite social spin slot games on ChumbaCasino.com. I looked over at the person sitting next to me, and you know what they were doing? They were also playing Chumba Casino. Coincidence? I think not. Everybody's loving having fun with it. Chumba Casino is home to hundreds of casino-style games that you can play for free anytime, anywhere, even at 30,000 feet. So sign up now at ChumbaCasino.com to claim your free welcome bonus. That's ChumbaCasino.com and live the Chumba life.
No purchase necessary. VGW. Void where prohibited by law. See terms and conditions. 18+.
Talking about the ABCs, 1, 2, 3s of buying a business on bizbuysell.com. Just going through some of the listings for the businesses for sale in Northern Nevada. Happened upon this one. That is a funeral home. Includes land. I don't know. Is that a... Can you depreciate that? Is that a wasting asset? I don't know. Anyway, you generally can't depreciate land. My first job was actually my first full-time job was at a cemetery in Las Vegas, mowing the lawn back when you can do that for when you were 15 and a half, and made good money. It was good, but So would you want to buy a cemetery? Well, one of the things is that you just have to ask yourself. Is if the cash flow is $253,000, they want $1.5 million. Now, I know what they're going to say is they're going to say, well, it has all this land. Well, I promised you before the break I'd explain all that. So generally, and I'd say generally because there's exceptions, but generally, if you sell the land separate from the business, what you would have to do is you would have to then, because you own the land, so you're not paying yourself rent. You would have to attribute rent expense to the price of the land, and then that would significantly reduce your operating income, your cash flow. But then you'd have, cash flow on the real estate, and then that you'd put a cap rate or capitalization rate to that. And so let's say, like right now, I'd say for something like this, you'd say 10%. So if if you said the land was worth $1 million and the business is worth $500,000, do some quick math, but you're getting a better multiple for the land, which is why I tell people that have land or buildings inside their business, just be flexible. When we list the property, we're going to list it without the land, right? That's where I think this one got sideways, because you would be better off reducing cash flow by the rent. And then, and that's just going to make it a better multiple, because these listings, this is a 6 multiple, nobody toggles on this listing. You just don't do it. Unless you're another funeral home, maybe, and you're like, okay, I can pick that up for cheap. In fact, maybe that's what I'll do. I know a guy. Anyway, but I think that's where you're like, it makes a multiple look out of whack. And by and large, people are looking for about a 3 multiple before they'll even toggle on anything, and they'll just keep on scrolling. So I'd want to do that as 2 separate listings. I list the business, and this business is probably about, sorry guys, probably about 200. It's probably about $500,000 ish, and that's not very excited from a business broker fee, but it's really the best way to get that business sold. And that's where I mentioned sometimes I'm just one good piece of advice from getting fired. or not getting hired, kind of just flips the opposite side of that same coin. So, and that's where, one of the things I want to do on this segment is, speaking of the other side of the coin, is, we've got this big deadline that's coming up. And October 16th, the final extended due date for individuals. And if you find yourself in this kind of bad spot where, you need to file a tax return quickly, and people will ask, well, I don't have all my information. And so there is a provision in the Internal Revenue Code that allows for you to make estimates if you don't have all the information. So maybe your dog ate it, who knows. But one of the things that we can do pretty quickly, and I found is a good shortcut for most people, is to get a power of attorney and then send that to the Internal Revenue Service and then pull a transcript, because I can get that the same day, and then I can drop in the tax software everything that's in the transcript. And then that gives me a pretty good idea of what the IRS is going to have. So I know that I'm not going to get a bunch of notices back saying, what about this, what about what, and you don't know. Maybe you're missing a brokerage statement from your Charles Schwab account, whatever. It's, the IRS has it, so we just get it, and then it just eliminates all that. So I found that's an easy little fun little hack to shortcut that. And then if you're a business owner and you're like, my books and records are a mess, I don't know what it is. The shortcut there, guys, is how much cash you took out of the business to live. Pay tax on that. You can always amend it later. You got 3 years to amend it, but you got to at least get the taxes paid. Because there's two things. If you pay late, you're going to get rung up. But you file late, that's another potential 25% tax. Just because you filed late. So don't file late. File on time with the information you have, and then amend it. That's what the system's there for. Now, if you're back in a little tax tidbit for you, if you're in a partnership, that's not so easy to amend those partnership returns if you can't opt out of the audit regime. It's called BBA, and so that might dampen my enthusiasm for amending a partnership return normally, because if you don't opt out of BBA, you have to amend the return or change the return for the year that the error is found, and that's the next year, which is actually oftentimes not a terrible idea, guys. It's just, you're kind of like, oh, okay, I can't even fix it this year, so I'll fix it next year. So you do, and I think that with all this audit activity that's happening right now is just being smart about audit protection and know, if there's aggressive positions. I wrote a 4-page memo. I think I mentioned it on last week's show. I purchased a CPA firm back east, and that was really going through some struggles. And as I did that, I just realized, there, not everybody has the same perhaps perspective that I do on what's deductible or what's not. So there is a lot of these clients that and they knew that some of their deductions were tomfoolery. So I just wrote a memo that said, well, this is, when automobile deductions are able to be deducted. This is, Code Section 162, ordinary and necessary. Here's, travel. Here's international. I just put it all in one place. Like, hey, just go read this thing. It's a bit of a primer. It's written, to the layman, but it's a primer on what's deductible, what's not. And then you can tell me if these expenses rise to that level of deductibility. Period. Right? It's like, because I'm not auditing the return. I'm just helping you comply with the tax laws, and that these rules are there to say no, that you're making an affirmative statement that I've complied with the substantiation requirements to be able to deduct all this stuff. So, but a lot of people, they just have not had that conversation with their accountant, so they don't know. And they, I can't tell you how many times people say, well, I have my accountant's really good, or my bookkeeper's really good, and well, if that may be true or maybe not, but I've seen more mistakes made by good accountants and bookkeepers because they didn't take the time to look at what the real rules are on this stuff. Probably case in point, if you look at your profit and loss schedule and you have an account called meals and entertainment, common bucket, it's a default in QuickBooks, meals and entertainment. I know nobody's paying attention. If I see that account, meals and entertainment. Why? Because for 2021 and 2022, meals are 100% deductible, entertainment's 0% deductible. So if I have a bucket that's capturing both of those expenses when they were both limited to 50% at one juncture, and I know that they haven't pulled it apart, they haven't done the rigor, right? So you should just, as soon as that law changed in 2018, they should have gone in like, hey, separate these into 2 separate buckets, told the bookkeeper, this is how you need to track this moving forward. No, then it makes it way easier. And then they're like, well, what happens if I had entertainment that includes meals? And we'll work through the rules on that. It's just, that's what we do, is we help people abide by the rules. But if you have that combined account, you know that nobody's been looking at it. It's same thing as if your S corporation is paying for your automobile, once a year, it's actually this time of the year, you should be getting something from the company saying what is the personal versus business use of that automobile. Just what the rules are, guys. And that's called having an accountable plan. And if you don't do it, then if you're audited, 87,000 auditors, they're real. I've seen these information documents. Hey, show us the substantiation and you're like, oh well, for the last 20 years, nobody's paid attention because there've been no auditors. So everybody's gone willy-nilly. They forgot to get all their stuff together because it hasn't been a problem. Well, now it's a problem, people. So I just say, and that is the accountable plan rules, S corporation, shareholder. Just make sure, you can make an estimate. Just make sure that that's substantiated back to the company. And now you're thinking, well, but Bosma, the company is me. Right. You have your hat on, your employee hat, and you have your hat on, your employer hat. Right. You're wearing both hats. And you have to make sure that you're having this conversation with yourself. And, of course, you have to do it discreetly so people don't think you're crazy. But to say, hey, I need you to substantiate. Okay, here's my substantiation. Why do I think that's good? As long as it's reasonable, it's golden. It's golden on the employer. So you just that I call it playing the tax game smartly. So that way when the IRS agent says, give me your substantiation, and you send them the sheet that the employee said, now the company's golden. Now, if they're going to audit somebody, if they're going to audit the employee, they're going to have to go audit the employee. Well, that's just not a target-rich environment for the IRS. Much easier just because you didn't get that one sheet of paper from your employee just to disallow the whole thing. So it's just, and they have you because they're like, oh, well, now that's really compensation. Now we have withholding and da-da-da. And you're like, okay, I'll just, how about we just don't deduct it? Well, if you just got the one little page, if you send me an email, mbosma@keystone.cpa, I'll email you the page. Just make sure you got your stuff. It's just silly that people aren't following these kind of relatively pedestrian rules. They're not hard. You just fill out the sheet once a year. Tell the bookkeeper, remind me once a year. Send it out. I'm telling you, once a year. It's October, November. You got to do it. So, because otherwise you're just in the crosshairs when somebody asks you, I don't have it. Okay. Then they know they're going to get a big check from you. Easy skeezy lemon squeezy. So that's, like I said, the good, the bad, and the ugly of what's going on in tax land right now. And I would say if you need one of those, 1-hour consults and just to, triage your situation, 775-786-4900. We come back. The number one thing you need to know before you even think about buying another business, it's Bosma on Business. News Talk 780, KOH. Talking about all things tax, all things how to buy a business, be smart about this stuff. I'm just saying. I think if I always leave my listeners with the number one thing, and I really was thinking over the break, like, okay, well, I teased it up pretty well. What am I going to say? But I thought about that. I'm like, you know what? It sounds a little pedestrian, but I think it's 100% true, and that is, before you start reaching out to these companies on bizbuysell.com, we have business brokers on staff. I'm a business broker with NAI Alliance. We've got 3 of us on our team. And so, have them explain to you how this works and have them reach out to these brokers or these business owners, talk about buying their business. I will tell you, one of the things that, I've just learned doing this work for now a whole bunch of years is that all the business brokers in Northern Nevada generally know each other and generally work together. It's not a 50-50 commission split because it just doesn't work that way. But having that understanding on the front end will oftentimes be the difference between getting a deal done and not getting a deal done. And if you're looking at buying a business, if you're looking at selling a business, don't worry about what it's listed for. I'm telling you, just don't worry about the multiple. Just buy a good business. You will make more money buying a good business, identifying a solid business that doesn't have a bunch of hair on it, that has employees that are going to continue to do the job, that all those things. that, and then just figure out what you can afford to pay for it. It's just, and if you do that, I just think you will be successful. I remember there was a business owner years ago who was buying a casino, and he just couldn't do it. He couldn't pull the trigger. I go, what is the problem? You're going to make more money on this thing than you can ever imagine. He's like, well, they're over asking, and I go, I understand. But you know what the opportunity is. They know what the opportunity is, right? And so he finally pulled the trigger. They got a deal done, and now he makes all the money. So it's just, don't get, just sometimes you just have to look at the quality of the business. And, one thing that people are buying when they're buying a business is certainty. So the more certainty they have that the lights will be on tomorrow, that things will go like they'd hoped they had, then the more you can feel like you can pay for a business. And the rate of return on these things, anywhere from 20-30% return, and then if you finance it, it's more than that. So it's just kind of and I would also say start small. I had a friend of mine that wanted to buy a machine shop, and I said, go work in the machine shop before you buy it. And he's like, I said, learn it from the ground up. Be the lowest person on the totem pole. Go to work every day. Work hard. And learn if this is a business you want to be in, because you've never had any experience in it before. And so he's doing it. He's like 2 months in, and he hates it. He hates it. I'm like, well, aren't you glad you didn't buy the dang thing and learned out you hate it? Now you just quit, right? Do something else. So, cut your teeth on it. And, and with an owner, a lot of them, I'll just, for people that don't have any experience in the industry, just job shadow. Just, hey, I'm going to, you can figure out how to tell your team why you're there, but just hang out. Maybe tell them you're interviewing for general manager position, whatever. But just be able to okay, I understand how this business works. It's the best training you'll ever get before you get into a serious negotiation on buying or selling a business. It's just, you want to know who you're getting into business with. I had a client that I was selling, helping them sell their business last year, and they ended up pulling out. Well, they've been working together all along the way. Well, they're just still courting each other. It's just they weren't ready to get married. Well, now they're ready to get married. They're going in definitive agreement. So, just because you don't buy it today doesn't mean you're not going to buy it tomorrow, right? And the reality is, if you're, I'm looking at an automobile shop right now. If you don't toggle on this one for whatever reason, you're still going to know these people. Now these are going to be your competitors, and you're going to want to have these good relationships. So, a lot of times, the ego tends to blow up deals, and that's where I think when people look at a hire a business broker, at least what I look at my job as, is to help people stay out of their own way on that stuff. People talk them off the ledge. Does this matter? Is this inconsistent? What are they trying to do? Are they trying to get over one on me? Or does this make sense? And I think those are things where if you can keep that your focus, buying a quality business that you can understand, you can see the linear nature, to be able to make a buck or two, then you understand it makes sense to you, then that's the essence of a good transaction. So that's it. And as we're kind of wrapping up, if you need some help, cause I'm completely buried until 10/16, but if you need some help, 775-786-4900 or mbosma@keystone.cpa, 775-786-4900 or mbosma@keystone.cpa. And that's for that's how you get in touch with the whole crew. So I got, Kyle McDermott, and Rich, Tower, who's helping me on the business broker side of the equation. That's through NAI Alliance. I've got, Brian Wheeler on Keystone Wealth Advisors, and leading the charge there. Being able, right now, I had somebody that came to me and was like, hey, I need to get my tax return done, and they owed a whole bunch of tax, and what we did, right? We said, oh, well, you didn't pay yourself a salary last year. They're going to pay themselves a 1099. And I said, no, don't pay yourself a 1099. Pay yourself a W-2, because then you'll get this 199 Cap A benefit that you wouldn't get if you did a 1099. And you're required to pay yourself a W-2. So you're actually, I'm going to get penalized because they didn't withhold my FICA and Medicare. So I calculated it. Just check this out. I calculated it. They were going to get penalized $7,000 of penalties for late payment of FICA and Medicare. It made them $50,000 in reduced taxes because of 199 Cap A qualified business income deduction. And I'm just like, but the way, and we also then kicked in a retirement plan on top of it. So Brian and his network was able to get this thing turned on literally overnight. So it's just kind of like that saved another $20,000 in taxes. So it's maxed out $61,000 of retirement benefit. $20,000 of tax, bada bing, bada boom. But we had to move it quick. I couldn't, wait for that to happen. So that's the beauty of having all that in house. So, and that's what I find is, as we really start working together, some of either the business attorneys working with, the state and trust attorneys, you have to be working with a team that's all working together, because otherwise, as a business owner, here, ask your person this, ask your person that, or what about this, and nothing gets done. And right now there is a premium for expediency, getting stuff done. And again, so if you need some help, 775-786-4900. Coming up next, Kim Commando. Just keep your IT space square. Until next week, keep that business engine humming. We call it Bosma On Business. News Talk 780 KOH.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show. Comedian John Christ.
How long have you been in Nashville?
2018 is when I moved here. I lived in an apartment. I didn't know anything about it. I lived in L.A.
You were living in L.A.? How was that?
Yeah. Well, let's see. Good for my career. Sent me to rehab, though. So, that's pretty much the sum of it.
The Sean Ryan Show on YouTube or wherever you listen.